Did you know that every business transaction boils down to a simple yet powerful formula? Hi, welcome to Acctvocab. Today, we'll explore the core principle of accounting, the accounting equation. It's quick, simple, and absolutely essential for understanding the financial world. The accounting equation is assets equals liabilities plus equity. Sounds fancy? Let me break it down for you. Think of assets as everything a business owns: cash, inventory, equipment, even patents. On the other hand, liabilities are what the business owes: loans, unpaid bills, or any financial obligations. And finally, equity is the owner's share of the business, what's left after paying off liabilities. It's like your financial scoreboard. Imagine this: you start a bakery with $10,000 of your own money, that's equity. Then, you take a $5,000 loan, liabilities, to buy an oven and ingredients. Altogether, your bakery now has $15,000 worth of assets. Why is this equation important? It ensures that every financial transaction balances perfectly. It's like the golden rule of accounting. So next time you hear assets, liabilities, and equity, you'll know they're all part of this magical formula. Keep this in mind, and you'll be speaking the language of business like a pro. Found this helpful? Subscribe to Acctvocab for more bite-sized accounting insights. Don't forget to like, comment, and share this video with your fellow learners. See you next time.